All right, good morning, everyone. Let's go. All right, last night's session on the S&P, we still managed to squeak out a new all-time closing high in the S&P, even though we dropped back below flat line sort of later in the afternoon. I managed to pop our head up just at the end there and finish up on the day. The Nasdaq outperformed the S&P slightly. You can see there up about three tenths of 1%. Really, same sort of thing. Not a whole hell of a lot going on there. We had there's a little bit of M&A action going on again. That's the one thing that's definitely been very bullish in this whole market rally has been the level of M&A that we've continued to see here come through. Obviously M&A is very bullish. There's a hell of a lot of IPOs going on. So we definitely, everything is there for us to obviously to signal a bull market. I mean, there's no question that we're in a bull market, obviously, but we continue to see a hell of a lot of M&A, and that's a very bullish thing for the market. We've got our good buddy Carl jumping back in. He's got 10% of Family Dollar now, so he's coming in and causing a lot of crap and trying to force his hand there. And then we had Apple that split 7 for 1 on over the weekend. So yesterday was the first day it's traded at that lower price. A couple people freaking out because their share was showing down 82% or something like that on the day, before they realized that the share had split. But yeah, not a whole lot going on in the States. In Asia, we saw a bit of a grind higher out of most of the indexes, with the Nikkei kind of being the outlier, but not a big push necessarily out of any of the indexes. Really, we saw Chinese economic data that came in. It was mixed. We had the CPI that was hotter, the PPI that was a bit cooler. And if I'm not mistaken, they actually came in and cut reserve ratio requirements last night by half a basis point. So that's definitely bullish. I mean, that's them trying to do some sort of stimulus. I did read about the most bearish article I've ever read about China last night, but yeah. Anyway, it got things going a little bit there. Some of the casino stocks were a bit of a laggard, but the market rallied a little bit there in Shanghai on the back of that. And then we saw Japanese equities that were obviously on the back foot because probably more than anything a stronger than expected yen rallied about 0.25%, but we've still seen absolutely no volatility out of the yen as of late. Right, there's an interesting little chart here showing the spread between gold shares and gold miners. You can see how close the correlation's obviously been. Obviously, one is underlying to the other, and we've really seen that gap open up in the charts here between the actual gold price and the gold mining index. And I think the most important thing to note here is that a lot of people over the last until last year were really bullish on the gold price. So these gold miners had kind of set themselves up. They were producing everywhere they could produce. They were producing on their on their high cost mines. They were throwing money at capex, and then the gold price kind of imploded on them a little bit. And so that's what we've seen. You're starting to see these guys start to pare back a little bit on the capex. You're starting to see them shut down temporarily, at least some of their marginal mines, and you're probably going to see that gap start to close somewhat. But you've also got the problem here. So many of these gold miners are local South African, and their costs have just gone through the roof because of things like salaries and electricity prices have taken things through the roof there. So I don't really necessarily see this gap totally closing, but interesting chart nonetheless. Right, and there's no corporate action that I know of to report today. We had a hell of a lot of market data out in Asia this morning. We had the M2 and M3 numbers out of Japan, which are both a little bit better than expected. We also had the tertiary industry index there, which was a little bit worse. Like we said a second ago, we had PPI numbers that came in a little bit cooler, but then we had CPI numbers that were a little bit hotter there, so probably canceling each other out. Though you'd probably look at the CPI numbers a little more closely, but Yeah, so we've got French industrial production and manufacturing production a little bit the same in Italy and the UK. And then we've got GDP in Italy a little bit later. And then here locally, we've got business confidence and manufacturing production. So really, to be totally honest, there's absolutely no data to really pay a whole lot of attention to going out the rest of the day. We're going to have to focus on the maps. All right. We're going to have to focus on the trade action. Let's get into the maps. To kick us off, first thing that we're going to have a look at here is actually look at the Aussie again real quick before I forget. Let's see here. If we just pull this forward just a touch, when we talked about that range that we were in the other day, and we popped out of that range kind of toward the end of the day yesterday, only to really close right back at that level. And the level's really 45,200, going all the way up to, or going all the way down to, call it 44,800. So we've really been in about 400 point range for, now we're working up to about 15 trading days now. You know, it's the longer this consolidation goes on, obviously the more important it's going to be. And when we get a breakout to one side or another, then we should see a reasonable move out of either side. Obviously, the move should be 400 points at least. But if we pop out to the upside today, which are very close to the top end of this number, it's only 20 points away from where we're currently trading. We'll probably see 400 points rather quickly, and could possibly see even more than that. Right. Let's look at. Come into the year chart here, and let's look at Kumba. Kumba, there's a couple, Kumba and ARI really starting to put in similar type patterns. We got a bit of an ascending triangle here on Kumba, which dropped major support, which we know about at 350 level, and it's kind of just drifting up toward this level. It's starting to get a little bit more narrow. If we drop out the bottom of this little support line here, I think we'll definitely go back and take out the lows rather quickly. I still think there's a lot of soft holders holding this thing, and guys probably punting the long side here, still trying to catch a falling knife. And if this thing drops out the bottom, I would fully expect it to come down and test 300 in a quick move. We'll look at ARI as well. Which is also basically came up to retest where it had failed, and kind of dropping out of a little bit of a bear flag here. So that's another one that kind of gives support to that same theory of what could possibly be happening soon in Kumba. As you can see there, definitely dropping out the bottom in a nice little symmetrical retest of the breakdown. Right, let's look at Naspers. Naspers is actually one of my favorite setups at the moment. I'm really liking this. Is on the daily chart, and you can see here, definitely, without question, this is a very clearly defined bull flag setup. And what I like about this is that it's really, it's kind of come down, and it's been putting all of this consolidation in right here on the shoulder line. We broke up, we came back, and we filled the gap from where we popped up here, and it did all this consolidation just after the better than expected earnings news out of Tencent. We've kind of just been moving out to the right and drifting and waiting for it to be able to build enough strength to push higher. We've popped out the top above the shoulder line. We've also popped up above the obviously the flag here. We've had another nice session overnight, and with Tencent up about 2%, and I fully expect this thing to retest the all-time highs, and I actually think it can do it rather quickly once it gets going. How that thing can move. Right, let's look at Adcock. Adcock, has come down here over the past few sessions to test this 54 level. And I think if we can drop here, we closed 79 cents above this level yesterday, so we are kind of drifting there or thereabouts. If we drop this level, I actually think there's a significant downside here in Adcock. So watch this closely. It could be as much as 10 Rand to the downside if we can drop here, at least $8, potentially even 10 on the technical target. All right, let's look at Coronation. Coronation, as of yesterday, finally dropped out the bottom of this head and shoulder setup. It's actually a really, really nice pattern that we've got here. Let me just get this drawn correctly. You can see there, yeah. So we definitely dropped out the bottom of this as of yesterday's close, and I would say that we're looking at probably as much as 10 to 12 bucks on the downside for dropping out of this pattern. So let's say that we dropped out here at around 97. We could see as much as or as low of a target as 85 to 87, somewhere in that neighborhood, which would really take us perfectly down to around the testing around the 200-day moving average and down around what is major support, I would say, right here where we built that little consolidation on top of the breakout. I think we could easily come down and test that level in coordination at 85. All right. The last thing I want to show you guys actually are two charts. One is Caterpillar in the States. We were looking at this yesterday, and the rudder pointed out to me that when I showed him this chart of Caterpillar, which has just made a huge reversal in the last 5 or 6 sessions, bounced about 7 or 8%. It showed me how high the correlation is to Barlow. Barlow, the correlation with Caterpillar is 85%, and we have now pushed Caterpillar's pushed up 2 standard deviations, I believe, higher out above what Barlow's is. So if we look here, Barlow's kind of consolidating on obviously just above the 100 level here. We can back this out and look at the 2 years. So we had the same sort of setup that came in with Caterpillar, pulling back, testing its support, and then it took about 5 or 6 sessions, and this thing and Caterpillar is making new highs. The setup looks really similar in Barlow's. Obviously correlations are really high there, maybe just lagging a bit, but it definitely kind of looking like Barlow's could be ready to go, especially with Caterpillar breaking out to new highs, new all-time highs, and this thing has an 85% correlation. Could mean good things for Barlow's over the next few sessions. And that's it for today, guys. Thanks a lot.